Yo, what's good YouTube? It's your boy Lethabo Mampana and I'm back again with another YouTube video. If it's your first time up in this channel, make sure you hit the subscribe button so you can become part of the family. Hit the like button for the YouTube algorithm so that this video can be spread to other people so that they can enjoy the good content that comes with this video. And if you already subscribed to my YouTube channel, shout out to you. As always, you and I are buddies. So today's just another day in the life of a broke Forex trader, where I'm simply documenting my life journey, my Forex journey on YouTube, showing you the ups and downs of the Forex market. So I'm basically just trying to make my money off of Forex trading, Forex online, So without any further ado, let me go ahead in my laptop screen and show you the pair that I'm looking at, and I will analyze the pair from scratch in front of you so that you can get a better understanding of how I analyze. And if you want to, you can also follow along with me. So now that we are on my laptop screen, and this is GBPJPY. GBPJPY, we can very clearly see. Remember, what I need to establish first when I get to the chart, I need to firstly hop to 4 hour time frame, which is the time frame that I'm currently on, right? Then the next thing that I need to check is the market structure. Is the market bullish or bearish? So as you can very clearly see on GBPJPY right now, this market is very bullish. But as we all know, what goes up must come down, so the market can't just shoot up without retracing, so and in this case, what we will then do is we will take advantage of that retrace, because as I can very clearly see right now is when I zoom in, I'm going to show you something very interesting. As you can see, price is currently here, right? This is where the price is currently at, but is it reacting from something? We can very clearly see that it's reacting from this order block to the downside, So let me just highlight that order block and see if it's something that we can utilize or we can capitalize from. So this is that order block. Let me just refine it and make sure that it's clean. All right, there we have it. So this is the order block, right, that we expect the market to react from. I'm not saying this is the order block that actually 100% sure that the market will react from. So what I'm saying is that this order block is what we are looking at for the market to react from. But it's a very, very high probability order block. Why am I saying that? I'm saying it because I can see here that it built liquidity here. There's a liquidity that got taken out to this order block, So this makes this order block a bit valid, So now that the price tapped into this order block, what I then do is, because I now established my trend first of all, and I established my point of interest. So this order block here is my point of interest. And as we can very clearly see, the reason why I'm taking this order block as my point of interest is because it has taken it has broke the market structure to the upside, as you can very clearly see. So now, meaning that we're waiting to see if there will be a great reaction from this order block up here. Then I now established my point of interest. What I need to do is to go to a lower time frame, which is in this case 15-minute time frame, to see if there will be any entry. So then when I get to 15-minute time frame, what I need to establish is the change of character. So I need to see the market realigning with the higher time frame on lower time frame. So as you can see, it has been going up. It has been going up, and price tapped into this order block, right? Then liquidity here was pushed. Number one, liquidity was pushed here. Then number two, we have another liquidity grab here to the upside. So first, when the market was patching liquidity here, it left an order block, obviously. Not order block, sorry. It left a low, which was down here. So this was the low that was left when it was going up. Then again we had another liquidity grab and leaving this low, right? So we waited to see if there will be a breakage of structure to the downside here, which indeed happened. You see, so this was a break of structure to the downside. But what we needed to see is, after the price changed character to the downside, we need to see a clear order block that left a fair value gap, and also that is in premium level, you know. So as we can very clearly see, this is the only order block that is responsible for the breakage of structure here, you know. But this order block is not very clear. Then let me just show you something here, why I'm saying that. It's not clear. There's no any fair value gap that is visible here for us to take a trade from. Well, you can argue and say, but I can always make this bearish candle my order block so that I can trade off. Yes, that could have worked nicely to the downside. However, that's not how I trade. How I trade is that I trade from an order block that is very clear, order block that left a fair value gap, order block that is either in premium or discount, you know. But in this case, I would look for an order block that is in premium, you know. So the market was broken to the downside, it went down, but what I was interested in this level down here. So this is the level that I was interested in. Should the market come and break this level, then I'm happy to wait and execute my trade. So I'm ignoring this, or I've ignored this. Then the market kept on going. It went up to tap some of those who likes to take trade from here. It tapped them in, and they were in profit, in loss, profit, loss, profit, loss, profit, loss, and they are currently in profit. But then that's when I see my change of character. Remember, I was waiting for this level 182.502 to be broken to the downside, you know. So it has been broken to the downside, and this is what I'm looking at currently. So this is where I'm now interested to take any trade. So firstly, what is the order block that was responsible for breakage of this structure, or breakage of this level? The order block that was responsible for that I can visibly see is this one. So this is the order block that interests me for now. But I'm not sure if it's the order block that I will trade off of, because I still need to verify. So first thing first, what I will need to do is to pull out my Fibonacci retracement tool from the top of that leg to the bottom of this leg, you know. So is that order block a premium, in premium? Yes, it is. As you can see, it's above 50%. You can see, let me just highlight so you can very clearly see. So as you can see, and you can see it's in 0.786, you know. And let me remove this. So I'm going to remove this Fibonacci retracement tool. So now we have one thing that gives us confidence that we can trade this from this order block, you know. So another thing that we need to look at is did the order block leave a fair value gap? So we're going to check that. I'm not sure yet, but we need to check. Did it leave a fair value gap? 1, 2, 3, there's no fair value gap from here. 1, 2, 3, there's no fair value gap from here. 1, 2, 3. This is the fair value gap that price will still need to fill. So this is the fair value gap that price will still need to come down and fill up. This is the fair value gap there. So it's not a high probability that it will come into this order block here, tap us in, then plummet to the upside. It's not high probability. Why? Because as you can see, where the fair value gap is ending, fair value gap ends here. So price might tap into this fair value gap and continue to drop, but we wait to see. So it doesn't check all the boxes, but we can always wait for it, you know. So it's either I'm going to take my trade, let me just put it this way, either I'm going to take my trade from this fair value gap here, or I will wait for this order block here, meaning that I will either take a loss from this fair value gap and get a profit from here if it continues to go down from this order block. So this is how I'm going to do it. Let me put this thing back so I can, yeah, let me lock it. So this is the fair value gap, and I'm going to take my first profit, my first trade from here, and obviously my target will always be the low of this leg, right? And my stop loss, normally I put 10 to 20 pips. Let me start by 10 pips and see if it makes sense. Okay, it does make sense. And secondly, I will take my trade from this order block. So meaning that I am ready to lose 10 pip on the first trade, and again 10 pips on the second trade if the second trade also does go into loss. So let me put 10 pips and see if it does make sense. Okay, it does make sense, but I'm going to just put 15 pips there. So it's 15 pips and boom. So now all we have to do right now is we are just going to wait for price to play through, and we will see if either of these positions get triggered and get into profit or loss. So all we need to do is just to wait. So thank you guys for watching this video. It has been your boy Lethabo Mampana, and I'm out. Peace.